The December market is seeing a decline in new inventory of homes coming on, a little cooler buyer demand, more home price reductions, and tempered interest rates. Now, while all that is happening nationally, we'll tie that data to what is happening locally, specifically to the three counties, right? King, Snohomish, and Pierce, for you to get the big picture. All in all, we have a super interesting market update in store for you. You don't want to miss. Are you ready? Let's go rock. Hey, Ravi, your local realtor with the Rams Group at eXp Realty here. It is great to reconnect with you. And I am excited to be bringing this market update to you. Now, back at it. I wanted to cover today about the slower decline in inventory, fewer newer listings now, and about a spate of new construction homes that would soon be hitting the market. Inventory is declining at a slower pace due to the lack of buyer demand. That's the only reason. Now, the lower buyer demand is because of two main reasons. Number one is that the interest rates are now higher, that many buyers are priced out and have decided to wait on the sidelines. And the second reason would be that many sellers are locked into lower interest rates, which is high 2s and low 3s, making them hesitant to make their move and give that up. Because if they were to sell and buy, they will have to pay a higher interest rate in the high 6s and low 7s, right? That is another reason. Of course, sellers who have to sell are listing their homes, and those homes are sitting on the market and aging peacefully with lesser buyers coming to absorb them. Not all that is doom and gloom for sure, right? If you're a buyer right now and have to buy, this is the absolute best time for you to buy, with more homes available on the market for you to select. And with sellers willing to negotiate to make the deals happen as well, could act in your favor. Now, for you could buy now and always refinance a year or two down the road should the rates come down, right? That's an option. And there's always a positive. You just got to look for it, I guess. Next, let us look at new listings that came on the market. There were just 47,000 new homes that came on the market in just the last week, which is about 25% fewer than at any time in the past several years. Now, let us also quickly look at the number of new construction homes in the pipeline. All across the nation, there are about 1.7 million properties under construction. For the huge deluge to hit the market, causing a huge spike in the number of new homes over the next year and beyond. That's something concerning. Now, this will surely put pressure on the existing home sales, as you are aware. Then, looking at the number of new listings that came on in November of 2022, we're down about 17.2%. Now, this is all not new construction homes, just that they were newly listed homes. There's a difference, right? As you understand. A closer look shows that the decline in the number of new listings has come down sharply. And what used to be the stat typically in the December months of every year, right from 2017 onwards, we are seeing that happen in November itself. Then looking at the inventory of available homes for sale, November data indicates that the total number of homes available for homes across the nation was around 570,000. And the available new homes are gradually subsiding due to not many buyers absorbing them yet. Now, data projections show that this number increased in November and through December. I'll keep you posted. Another interesting stat is that rentals across the nation are competing with homes for sale. On average, it costs about $888 more a month to buy than rent a similar home. Yep. Rental rates across the nation have declined for 3 months in a row through October. Also, between 2000 and 2008, as you can see here, it was more expensive to rent than own. And between 2008 and 2020, it was more expensive to own than rent. And since the start of this May 2022, it is more expensive to buy a home than rent. And this is purely due to the interest rates shooting up, if you will. Now, the number of purchase mortgages, which is a clear indicator of how brisk the market is overall, right? With the recent rate drops, the number of mortgage applications increased week over week by 4% for the 4th week in a row. And we all know that real estate is purely based on supply and demand, correct? The existing home sales year over year has been trending lower since January of this year. It started out from a 3.8% drop, then all the way to about 29.5% in October, which is interesting. Moving on to pending contracts per week, which is down by 45% year over year and 6% week over week. First off, let's define what contract ratio is, okay? It is how many homes that went under contract for every 100 listings that are active on the market. That's what a contract ratio is. Now, earlier this year, in January of 2022, this number was a little above 100, like 110 to 150, to mean that homes went under contract as soon as they were launched earlier this year. Now, with just about 47,000 new listings going under contract, the contract ratio was just at 55, literally flat from the previous week. So we are seeing more homes being stagnant, so the contract ratio is dropping precipitously. Now, what does all this activity affect, right? The number of homes taking price reductions, correct? Well, 43.2% of the listed homes took a price reduction, at least one, before going under contract. And this is staggering if you think about it. And this data has been progressively tracked since 2016, as you can see, and the deep red line is tracking for 2022 specifically. And if you get about 45%, we are literally in the bad market territory for price drops. We'll see. Also to note, January of 2023 will start with listings having a lot of price reductions after we come out of the holidays. And the new listing prices are predicted to turn positive starting just about the third week of January onward. Now you may wonder, what's the forecast for home prices, right? The $1,000,000 question, if you will. Well, Fannie Mae expects the demand to stay low and prices to decline through 2024. A little pessimistic, right? But for Q4 of 2022, though, they are predicting about 9% increase. And for Q1 of 2023, they're predicting a national annual price appreciation of about 3.3%. Now, with interest rates continuing to rise to curb inflation, sellers, as we know, are staying put in their current homes, like we discussed before, and are not buying due to the lock-in effect, which is that they're already locked into a lower rate. And it's been statistically said that 92% of the sellers are at a home mortgage interest rate of 5% or less. So why would they let it go and choose to pay a higher interest, right? All this data, however, has to be taken with a grain of salt as to what happens in reality with so many other things going on globally, along with the inflation in the house. How all this plays out needs to be seen, and I am keeping an eye on the market and I will keep you posted. Quickly shifting gears, let's look at the interest rates, which have tempered a little bit from the highest of the recent highs, from 7.25% to just about 6.75%, if you will. Now, a confirming loan of around $500,000 with a good credit score of 740 plus with 20% down payment, the interest rate without points is about 6.75%. To recap, nationally, there is a slower decline of existing homes available for sale, drops observed in the number of new listings, homes becoming costlier to buy than rent, the number of homes going under contract being down, number of homes taking price cuts increasing, and the only positive out of all this is that lower interest rates providing enough incentive for buyers to buy. So what does all this mean if you are a seller or a buyer, right? If you're a seller and you have to sell, now your reason to sell should not be fear-based, by the way, and if there is a genuine reason to sell, catch the opportunity now and make your move, as the time now may be in your favor. And if you're a buyer, on the other hand, this may be the perfect time for you to buy, as you have more selections in the market and your ability to work with the sellers is much higher because they're willing to listen and then agree to offer you the best terms and price, and for you to pick the dream home of your choice. And the icing on the cake is that the lower interest rates may favor you much, much more to make a better decision. Now, after looking at what is happening nationally, let us kind of tie it into what is happening in the local market, specifically in King, Snohomish, and Pierce counties, shall we? Now, most of the indicators happening at the macro level across the country are trickling down into our local market as well. More specifically, the number of new listings in King County decreased year over year by 16.4% to about 1,262 single-family homes. This decrease in new inventory was more like 23 and 29% year over year in Snohomish and Pierce counties. And now it is true that more homes are sitting on the market with not enough buyers coming around to scoop them, as well as many sellers have the rates locked around 3% like we saw before and are hesitant to move. Now, sellers staying put has caused a dip in the number of new homes that came on the market. Switching gears, the number of new condos that came on the market was also interesting. Their counts also decreased by about 12.5% in King County. Now, Snohomish and Pierce counties saw about 32 to 40% decrease in the number of new condos coming. Yep, they just kind of took it on steroids, if you will. Then pending sales for homes, which is the homes that went under contract, in King County decreased by almost 40%. And a similar number was observed for condos as well. Now, pending sales in Snohomish and Pierce counties were similar to what King County observed as well. Let's quickly move on to how long homes sat on the market before going under contract, right? So King County rang in at about 123% increase in the number of days, from 13 days before homes went under contract to about 29 days. However, in both Snohomish and Pierce counties, the number of days before which homes went under contract increased by more than 140% to be at about 31 days, almost a month. Now, it is expected that with a shifting market, homes sit longer in the outer areas compared to King County, especially in Snohomish and Pierce. Now, as we saw, homes are appreciating less, and many sellers are taking price cuts for helping with a quick sale. That said, the median price increase year over year was about 0.6%. However, the average price dropped to negative by about 0.2%. Now, one interesting observation though is that Snohomish and Pierce counties saw the median as well as average price increase by 6 and 4.9% respectively. So now, whether it's a blip or a trend has to be monitored over 2 or 3 months, right? And then I will keep you posted if that's what is emerging in those counties. Then let's move on to percent of list price received for closed homes, which decreased by 7.1%, and for condos, it decreased by 3.5%. Now, buyers are having more options, which increases their negotiating power, and sellers who are motivated to sell are making price cuts to accommodate a quick sale. And the thinking is that sellers don't want to wait for long for interest rates to slowly keep going up, with more buyers getting on the sidelines to cause the buyer pool to shrink. Then moving on to the inventory of homes for sale, which increased across all 3 counties. Now, King County rings in at about 244% increase year over year. Wow. King County, of all the 3 counties, had the highest increase in the number of homes for sale. Now, for condos though, Snohomish had the most increase in the number of condos for sale. Now, when the interest rates go higher, the buyer psychology is that why pay more for a condo with its HOA fees and other incidentals? So buyers generally feel that they are more comfortable buying homes rather than settling for condos in those counties. And finally, here is the mother of all, tying everything together: months of inventory. For King County, this increased by a whopping 400% in the months of supply of homes year over year. Snohomish also saw a similar increase. Now, to refresh what months of inventory is, it is actually how long homes will take to sell, assuming no new homes came on the market, okay? That's what months of inventory means. Anything 3 months or less is a seller's market. Anything between 4 and 6 months is a balanced market. And anything 6 months or higher is a buyer's market. Though homes staying on the market is increasing, the months of inventory across all 3 counties, stats say that we are still in a seller's market, right? Based on the definition that I just provided. Months of inventory less than 3 months is still a seller's market. Though homes are staying in the market across all 3 counties for much, much longer than what they used to, we're still in a seller's market. At least the numbers indicate that is the case. However, with buyers applying brakes with their purchase, the inventory is increasing in numbers along with the days on market. Yeah, I hope you found this information that I shared useful. And if you did, consider subscribing and hitting that like button. I hope to bring you relevant real estate related content nationally as well as locally for you to just tie the big picture with what is happening locally for you to get the complete end-to-end picture, okay? And I appreciate you. Well, that's a wrap. Next month, we will be in the new year. It'll be interesting to see how things shake out. Now, I am keeping an eye on the market and I shall keep you posted. Until next time, you stay safe and Merry Christmas and a Happy New Year to you and your family. I'll talk to you soon. Make it an awesome one. Bye-bye.